Every year, families find themselves buried under thousands of dollars in medical bills because of a single oversight during open enrollment. These financial losses aren't random. They stem from repeating the same errors on healthcare.gov that I see people struggle with every single year. We're breaking down the 5 most common ACA mistakes today. You need to pay close attention to number 4. It's a hidden rule that catches almost everyone off guard. If you rush through your enrollment to save 10 minutes, you could be leaving yourself exposed to massive liabilities for the rest of the year. Let's get into it. Mistake number 1 is the premium trap, sorting your options by the lowest monthly payment and assuming the cheapest plan is the best deal. A bronze plan with a $0 or $50 monthly premium looks like a win for your monthly budget. But those upfront savings come with a catch, a deductible so high it can turn a routine procedure into a financial crisis. Look at this balance scale. On one side, you have your low monthly premium, keeping your fixed costs down. But on the other side, the scale tips under a $9,000 deductible that you have to pay before the insurance covers a dime. One trip to the emergency room will instantly wipe out an entire year's worth of those low premium savings. The smart way to shop is to calculate your total annual exposure. That's your total yearly premiums plus your worst-case deductible. Mistake number 2 is assuming your current doctors and specialists will automatically accept your new plan. There is a massive operational difference between a strict HMO network and a more flexible PPO. One covers you only within their list, the other gives you room to move. Insurance companies actively change their approved provider lists every year. The doctor you saw last month might not be in network by January. I once worked with a client who skipped the network check and ended up paying full retail price for their specialist for an entire year. If you don't verify the provider directory now, you could be stuck with 12 months of out-of-network bills. Mistake number 3 is the income guessing game. People often underestimate their upcoming income to get a bigger discount on their monthly bill. Premium tax credits are paid out based purely on the income you project for the future. This chart maps effort against financial risk. Guessing your income ranks in the extreme high-risk zone for the minimal amount of time it takes to fix it. The IRS audits these subsidies. If you underestimate what you earn to lower your premium, they will claw that money back when you file your taxes. Calculating these tax thresholds accurately is stressful, and it's okay if you feel a bit overwhelmed right now. This is exactly what I do every single day. As a licensed agent, my services are provided at no cost to you. You can reach me by email or call my office directly at 678-404-9230. There's also a link in the description to book a quick, zero-cost consultation call directly on my calendar. Whether you use an agent or handle this on your own, you have to avoid mistake number 4. That brings us to the hidden rule we teased earlier, missing out on cost-sharing reductions. If your income is below a certain level, the government provides CSRs, extra subsidies that specifically lower your out-of-pocket deductibles and copays. But there's a critical catch. These reductions are legally restricted to the silver tier only. This flowchart shows the choice. If your income qualifies for these extra savings, and you try to save money by picking a bronze plan or upgrade to a gold plan, you lose the subsidies entirely. However, choosing a silver plan activates those lower deductibles and significantly reduces what you pay for medical visits. This means a bronze plan can actually cost you much more over the course of a year than a subsidized silver plan. Picking the wrong metal tier when you qualify for these credits is the most expensive math error you can make on the marketplace. Finally, don't fall into the default trap of letting your current plan auto-renew without shopping around. Carriers overhaul their drug lists, their networks, and their prices every single year. Look at this matrix. A plan that covered all your prescriptions last year might have dropped them from the list for the upcoming year. If you accept the convenience of auto-renewal, you are essentially accepting whatever price hikes and coverage cuts the company decided to make. Shopping the marketplace every year is the only way to protect your budget from sudden corporate pricing shifts. The ACA is a financial minefield, but you don't have to navigate it by yourself. You can delegate this entire process to a professional agent who will optimize a plan for your family's specific needs. The scheduling process is simple and takes the back and forth out of finding a time to talk. Look for the pinned comment below this video and click the link to grab a spot on my calendar. Or if you prefer to keep researching on your own, you need to know how to read the fine print. Click the video on your screen right now, where I show you exactly how to understand your ACA coverage details. Taking action now is the only way to make sure you aren't overpaying for your health.